Yes, this liquidity concept and fair value gap concept trading strategy is very easy, and you can stick to it to make a lot of money in the markets. This is a 3M wizard, so Vincent. Let me take you through this very simple strategy. Now assume price is trading this way, then towards New York Open, price takes out those lows. We call it manipulation or even liquidity sweep. That way then price reverses aggressively after taking down those lows. Price closing above the range up here, then retracing back to a fair value gap here, then shooting higher. So this retracement back here may be a fair value gap. So price takes out this liquidity here, that is old lows. Old lows are taken out that way. So this one becomes a liquidity sweep. Price taking out that. Maybe Asian low, maybe London low before New York Open. So that there we call it liquidity sweep. And the liquidity sweep can be either composed of a series of down close candles or up close candles, or even just a long candle wick to take out stop loss orders, then reversing higher. Now your only job is to wait for a formation of a fair value gap while price is reversing after taking out liquidity. Wait for a formation of a fair value gap. Remember, this is during New York Open here. Now that New York Open, price takes out liquidity. That's around 4:30. Maybe most of the time equities open or even 4:30 open. That is around 5:30 p.m. East African time. So this one becomes the 5:30 East African time when equities open, or even US New York stocks market opens, leading to a lot of volatility in the markets. Price taking out those lows, then closes above this range here, reversing back to our bullish fair value gap. Your only job will be only to take a trade after an up close candle from the fair value gap, then stop loss down below the fair value gap, then just target to risk reward. That way, let us play this one out on the left side so that you can see. This one was on Tuesday, so this one becomes the highest high formed on Tuesday, that becoming previous day high. Key liquidity pool, then we have equal lows here, which is also PDL, that is previous day low, as iliformiwa on Tuesday. So your only focus should be on Wednesday, how Wednesday price action will react to these levels, these key levels. Let us play the price out. Remember, we are only waiting for New York Open. So our New York Open will be here. This one here, that is 4:30 East African time. So let us play it out very fast. Remember, I expect these equal lows to be taken out first, then I target previous day high. So that is intraday trading, just focusing on intraday liquidity. That's all. As a trader, you can use this strategy to make money from the markets consistently. A very easy concept. So it just requires patience and mastery, just focusing on the strategy. A very simple strategy. So very fast, as we wait for New York Open here at 4:30 East African time. Remember, we also have equities open at around 5:30 East African time. Those are key time frames. Those are key times during trading. So I expect these lows to be taken out, or even the PDL first. Then now this is a fair value gap here. I expect price to close above it so that we can look for buys. So here I will reduce this very fast. I want to see a candle closure above this level so that I can look for buys targeting maybe London highs. So this one here is a London high. So that one there is a London high. A key liquidity pool there. So very fast we can look for buys whereby price closing above this fair value gap. Good. Very fast. Yeah, that candle closed. This candle closed above it. So I'm waiting for formation of this fair value gap here so that I can use it to enter the trade. So I will wait for formation of that fair value gap so that I can enter the trade. So this one becomes an inversion, a bullish inversion. This just confirms reversal. So I will mark it with a different color. Yeah, that way. So I want to see a retracement back to the fair value gap, then look for buys. Good. So I will look for buys there from this candle here. So my entry will be this way, from that candle there, then stop loss slightly below the fair value gap, then I will be targeting just to risk reward towards the PBH up there. So very fast I will click on the buy button. 10 units, not bad, but remember to manage risk according to your account balance. Don't over risk, always risk a better percentage of your account. We'll then play it out very fast so that you can see how it goes on. So the moment you are inside the trade, and boom, our profit was hit. Our profit was hit. And that's how it is. This strategy is the best strategy ever you can use. Thank you.